Our lives in America are telling us that this country needs a civics lesson, an outlet to, in layman's terms, get to what is really happening in our judicial system and our legal society. Whether you're a law enthusiast or just curious about how our system works, the Full Docket is your guide to understanding the laws that impact us all. I'm Alex Almazan, founder, attorney, and managing partner over at Almazan Law. I encourage you all to listen. I encourage you all to provide us with feedback. Welcome to the Full Docket. Hope you enjoy. Hello, everybody, and welcome to the Full Docket. So here we are for another episode, and today I'm happy to welcome a friend, somebody I've known for a long time, as we get into the world of insurance, PEOs. Everybody here has insurance in some way, shape, or form, whether you're a business or whether you're a homeowner or whether you drive a car. And the reality of it is there's a lot of changes coming through. So we're here to talk about that. And the company that we're going to have featured today is a company that I've known a lot of for a long time called Winston Crum Insurance, and their current president, Matt Crum. Winston Crum Insurance has been around for over 20 years, originally founded over 40 years as a separate company, and Frank Jr. and Frank Sr. had an opportunity to then take it forward as a commercial insurance carrier that started off as a family company and has now moved into a family of companies. And from a single state licensed carrier to one licensed, Matt might correct me, to at least 42 states. And now we're looking at a company that handles workers' compensation, general liability insurance, and a provider primarily to small and medium-sized businesses throughout the country. So I feature today Matt Crum, its current president, who's been their president since 2013. He is responsible for setting strategy and leading operations for the company, and is a dual bachelor's degree graduate from Trinity College and also has an MBA from the University of Tampa. So without further ado, let me bring in my friend to have this conversation. We're going to try and make insurance conversation fun. So we're going to try that together. And let me go ahead and introduce Matt Crum.
Yeah.
Matt, did you get to hear what I just said?
I did.
Did that sound pretty cool, man? Did I sound like I could do marketing for FWCI?
You did a good job. You may have a thought if insurance law doesn't work out.
Well, we're going to talk about AI today and how it impacts both of our businesses. So if it's absolutely deflationary to mine, I might actually take you up on it. And this is being recorded, so I just will send you this. I'll be like, I think you offered me a job. So we're gonna move into a few things. So, man, listen. After what I just said, I think actually the best thing that I could do to start this whole conversation off with you. So, first of all, pal, thanks for being here. I appreciate it. I think the nature of what we're trying to do here on the Full Docket is to have people from a variety of different industries, things that impact the legal world, things that specifically for us impact Florida, things that are going to be important to not everybody, but they're going to be important to people who are going to watch and pay attention and get some information, hopefully more because of you and not me, because the one I want to talk more today is you. But maybe start with what I just said about Crum and the business model for FWCI that is both an insurance carrier, has the PEO component, and then how you see as we approach the end of 2024, the future of your company in particular as it goes into 2025 and beyond.
Sure. Well, thanks for having me, Alex. For our company, personally, it's been quite a wild ride. And at the end of the year, we're in December, and it's always good looking back at the year. And it's shocking. I was talking to my CFO earlier today, and we've got less than 2 weeks or 2 weeks left in the year, which is unbelievable how fast the time goes. But yeah, the company was started, my dad and grandfather started it back in the 80s as a staffing company that evolved into, a payroll PEO company, and, which evolved into a few other businesses as well. One of which is an insurance carrier, an MGA as well. And so we've just been blessed. We've seen the way we've grown is we've seen opportunities, an area that's underserved or that we feel like we could improve the services for our customers or in a space. And, we've grown organically through that way. And so we have been throughout our history 100% privately held, which allows us to take a little bit, I'll say we're patient capital. We don't look at returns on a quarterly basis. Yes, we want to do well. Yes, we want to keep feeding the business. Yes, we want to continue to grow, but we can make decisions that have longer payback periods that, may be better for the organization and our customers. And kind of that's how we run the business. And that's probably how we're going to continue to run it as well.
Well, and definitely with you at the helm, it seems that way after over 10 years. And I know your sister also is, I think, a co-president, if I'm not mistaken, right? So I talk about family owned for sure. My wife worked when I started the law firm. She worked here for 3 days. And she looked at me and she goes, I can't do this. And I've never had a family member work here since. So I can appreciate working with your sister. There's an underwriting conversation that I want to have without making anybody who's listening to this fall asleep at the wheel of their car. So I do want to get into a little bit of the risk analysis portion of it. And I know we're going to talk about AI. I told you in advance, we're definitely going to have that conversation. And per your words, which I agree with, we could spend a whole episode and not have enough time to talk about that component for both of our professions. But maybe talk a little bit about that aspect and how you see it moving forward. And I know there's an inflationary cost of claims that's happening across the board. So it's not just literally inflation, which we've been seeing over the last couple of years, but increases in medical expenses. And so maybe a little bit on both of those topics, on how you see the risk analysis piece of underwriting as we move forward, and then this kind of higher cost of claims and how a company like yours would be dealing with that.
Sure. Obviously, we're both in insurance. We can geek out on this all day. And I always find it fascinating. And we do. So we have a pretty robust internship program where we bring in, 15 or 20 interns from different colleges around the country each year. And I always kind of give my standard boilerplate speech about insurance and why I chose to go in insurance. Not only did we have a company, I had kind of different directions I could go in my career. I find it pretty fascinating. You've got the legal side of things, claims, the underwriting, the risk assessment side of things, pricing, ops, reinsurance. I mean, there's kind of something for finance, investing as a carrier. There's something for everybody. And so to me, it's pretty fascinating. And it's, to your question, it has always been and is even becoming more so a very dynamic environment. And so, everyone, you put processes and procedures in place, and you put a business plan in place, and then something like COVID happens and completely upends.
You just throw it out the window, right? You just got to throw it out the window.
And that's with any operating business. But when you think of like claims, like I feel like in 2020 and even going into 2021, every comp article that was written was about people questioning or predicting how COVID was going to affect the claims process and workers' comp claims. Are COVID claims going to be covered depending on your jurisdiction where they are? But that's just kind of one example of how things have changed. And what we're finding now, and specifically in workers' comp, is work comp has been the belle of the ball, the most really profitable line of business in property and casualty for the last 8 to 10 years. And business owners have seen rate pressure and downward rate pressure. Rates, specifically in Florida, it's an administrative pricing state, meaning Florida sets the rates. Different states handle their pricing and their insurance rates in different ways, but Florida specifically is an administrative pricing state, and rates have gone down each year over the last at least 8 years. I think there may have been 1 year where it bumped up slightly, which will put pressure on an insurance company's results naturally, right? You're writing the same risk for less revenue,
Right.
and where everybody knows medical inflation is going up. But what we're seeing is frequency has trended downward and has been pretty consistently trended downward. And that has to do is, I know we're going to get into this, AI, automation, just better education, more safety. The economy helps tremendously when business is good and workers are getting paid well. They're incented to get back to work quicker. That's something that you deal with on a day-to-day basis. However, what we're also seeing and what our reinsurers are seeing is severity increases. The same claim where an employee, it costs more. An employee, these catastrophic claims that we deal with, that these new medical technologies are coming out, which are great for the injured worker. However, the price that, the costs of some of these treatments are tremendous. And same thing where, back 10, 20 years ago, 30 years ago, a worker would have a catastrophic injury and may not make it because of our medical advancements. They are making it now. Those just driving up the cost of claims, which is, it's, while you're balancing the reduction in frequency, severity has grown pretty significantly. So which puts pressure on what, for us, reinsurance pricing and these cat layers. I'll get a little nerdy with you for a second.
Yeah, I'm all in.
Workers' comp carriers used to, a $5 million claim was a pretty catastrophic claim back in the, 90s and 2000s. while those are still catastrophic claims, like you didn't really see claims reaching and breaching 10 million and 15 million. I'm not saying that those claims are frequent nowadays, but they happen,
They didn't
getting up.
exist.
They
Didn't
didn't
exist.
exist. Upwards of $20 million. Again, they're still rare, but you're right. They did not exist previously. And now it's not, you'll see them.
Yeah, you'll see them. I don't disagree with you. And I think some of those medical things is kind of like when the first flat screens came out, or if you wanted to get the first iPhone, right? Things were simply more expensive, and then over time they diminished. But then something else became just as expensive, right? To implement and to go forward. And you mentioned COVID. I saw it, as you know, we have a pretty robust real estate practice over here. And one of the things that I saw was during COVID, the same way you talked about some changes, was everybody thought that suburban office space was going to be the next thing, right? So like 5 minutes from your house, somebody owned like a quadplex or had like a small 10-story, a 10-unit condo building. We were going to destroy that and make it home offices for people and whatever. And that didn't really take shape. Everybody who invested in that is kind of losing their shirt these days. But one thing that did happen, and your industry was already doing it. I'm old enough to have remembered when, going to say FWCI or going to another client meant you bring some sandwiches and you were given a CLE to 50 people. I know I've been to your offices. I know you have people that work there, but some of those places are mostly ghost towns in the industry now, as everybody has now gone remote. It was already happening before COVID, definitely never going back. Maybe touch on that a little bit. How is that affected? Because it's not from a workers' comp standpoint. I mean, we've all seen if you get up from your chair while you're working at home and you trip on the way to the kitchen, that's not what I'm talking about. I'm saying from an industry, from a retention standpoint too. I think it's no secret that the same way you said you nerd out a little bit maybe and go talk to some of these people in the insurance industry about why insurance might be sexy, because there's multi layers that you can get involved in, right? The investment side, the financial side, the agency side, even the broker side. But I think the remote worker option is something that's important, because I think you run into training issues. You run into the inability to have those very things in person, the supervisor that may reach out. But from a standpoint of just staffing, and I know you have the PEO component too, is there talk about the remote work is here to stay. I think you and I can agree with that. How, if anything, do you see the impact, maybe not only within your business walls itself, but just as the industry as a whole?
That's about this.
Everything we mentioned today, by the way, we could have an entire podcast. I mean, I can bring you back once a quarter. We can choose different things. But after this, I am going to move into AI, because I definitely think that's going to monopolize a lot of our time.
Sure. Yeah. So I'll share our personal story. So COVID affected change in our organization pretty drastically, because we were an in-office culture. Our company, we really harp and focus and are very intentional about our culture. And we do believe in mentorship and being in office. And when COVID hit, we had the capability to work remotely, and we had to, but we are in Florida. Florida, COVID was treated a little bit differently than other areas
We
of
were
the country.
open, Matt. I can say things you can't. We were wide open. COVID did not exist here.
Yeah.
We'll just leave it at that. We move on.
Yeah. But it forced us and many others to rethink about how we look at work. And I will say that in some ways, it forced us to get better. And there are pros and cons to anything. I talk about this a lot internally and externally about remote work. I think you're totally right. I think remote work is here to stay. I think I'm interested to see, it's been, it's been 4 years, but it's been interesting to see how different
Slide back. Yeah.
People go full remote, and then that's not working. And we're in this kind of paradigm shift. And I think there's still some change associated with it. I think there's pros and cons to being full remote. I think there's pros and cons to being, fully in office. And it's probably going to end up somewhere in the middle, which is kind of where we are. We have some fully remote employees. We have some that have, most of our employees have hybrid schedules. And I'm curious to see some of these large companies that have, reportedly made some, edicts that everybody's coming back into their office. And actually, I'll give you an example. There's a large carrier who has been pushing to move people back into offices, where, again, we traditionally always wanted people to be in office, but we've changed the way we manage our employees. We changed the way we're leveraging Teams and Zoom and kind of the expectations and how you manage your day to day, and using these tools, these new technology tools. So we're more okay with people being remote. And actually, we're able to pick up very, very talented people that would otherwise not be an option.
Right, because they don't live within 15 miles of your office, right?
We have employees and adjusters all around the country and people in the Midwest and California and the East Coast that they've got a family and there's no way they would consider moving to Florida. And 10 years ago, that would have been a requirement. We just said, no, you have to be here. So we have to do things differently. We have to, pay to bring people in to try to foster that camaraderie, to foster that our culture. And we have to be very, very clear about the culture that we have and the expectations that we have, because it's very easy, out of sight, out of mind. If you don't, you have to manage differently. You lose that, new employee, go out to lunch, go to the cafeteria,
pivot.
Water cooler talk, you lose that. And so you have to be more intentional as middle management and upper management, at kind of, bringing people into the fold. And it's a deeper problem, but it's a problem that has solutions. You can solve for it, for younger employees.
And it's an art, right? It's an art, not a science. It doesn't one size fits all for every business.
No. And so we're kind of hybrid where we prefer people to be in office? Absolutely. Am I going to pass up someone who's extremely talented who lives in Wisconsin? No.
Yeah. Yeah. And I think that's the best segue for you. I saw it. I remember years ago, down here living in Miami, that we're basically a service-based town, and we've exploded with lawyers, financial advisors, everybody that we were just talking about when COVID was wide open, and as everybody that had 2 quarters together or had billions is now down here. And I've enjoyed the increase in the property value of my home that I can't sell now because I can't afford to move anywhere.
Either.
I like what's happening on paper, right? So, and your town, by the way, we'll get into this a little bit. Your town is catching up, and that there's good and bad for some of that too. But I remember the financial advisors, right? 20 years ago, if you weren't in New York, people didn't want to hire you. Nobody gives a crap anymore where they're located. Everybody that I knew that was in New York, that was living in Connecticut and taking the train, is now here, and nobody cares. And to some extent, that's the same thing with what you do. I've talked about in my own law firm. I've got lawyers in my Tampa office that handle Miami-based cases, and my clients in Miami don't care. They're never even coming to my office. That's why I can build a podcast studio, because I don't need this to be somebody's office, or I don't need it to be a waiting room for my client. So I'm with you on that. I think as we look forward into the kind of future of remote work, it's 100% here to stay. I'm also monitoring, like you, how the ebbs and flows of people coming back. And there's always going to be people that want to work in person. There's always going to be people that are better off. I'm a person that could never imagine working fully from home. I like the interaction of people. I need to be around people. I need to dress up, try and look fancy like you and come into the office and be around people. So, I can appreciate that. I think I want to pivot for a second so we have enough time on the AI piece, and maybe just specific to Florida. So if I got it right, I said in the intro that you were in, I thought 42 states. Did I come pretty close to the right number?
Something like that. Yeah.
Yeah. Close enough. At least you didn't tell me it was 25 and you're shrinking.
No,
I knew it was, last time I checked, it was about 42, which is phenomenal, right? So in those 20 years to go from 1 to 42, but specific to Florida, which is where I'm located and where you're sitting in Tampa, we've had some changes in insurance in the last few years. And while I, as an attorney of 25 years, might be in a better position to talk about the impacts on a tort reform standpoint on certain aspects, I'm wondering if specific to Florida, if you've seen anything. I will add and throw you a little bit of a bone of what I see on my metrics, which are an increase in construction defect litigation. I've definitely seen that in 2025. I saw you open your eyes, which I think you're going to tell me you unfortunately agree, because I know you insure a lot of that market. But I've definitely seen it. I do think some of it is associated with the realities of the statute of repose being brought down to 7 years. So you got people having to hurry up, and the timelines for when statutes begin to run is working in favor of the insurer and not in favor of the property owner. I also think it's, in fact, ironically, with people moving out of that first property insurance stuff that they used to mint on, and there was a bunch of attorneys. It's one of those practice areas where my own wife would have been like, why don't you go do that? Because people make so much money. Well, that's why they changed it, because they were making too much money. But now there's thousands of lawyers. I think a lot of them, I've seen them. They're migrating into this construction defect space because it's about property. They've got some associated interest in it. So maybe not specific to construction defect, but just in general, maybe in Florida, how have you seen the landscape in the last couple of years, just for your own business or insurance in general? And what do you see as forthcoming into the future that's specific to Florida?
Well, how many practicing attorneys do we have in Florida? Over 100,000, I think now.
That's enough where if you eat a bad hot dog at a food truck from somebody who is uninsured, there'll be 9 lawyers dropping their business card. Yes, and we're pumping them out every year. And you can do what I do, until you develop some sort of brain condition. I mean, I could be 90, right, and conceivably still be practicing. So there's a lot of longevity. To echo whatever you're about to say, I agree with you. There's too many of us.
And so it's kind of it's the flavor of the day where attorneys can make money and where they want to focus. The early 2000s workers' comp was a big money maker. They made big changes. You had sinkhole for a while. That moved on. Now it's really construction defect. Tort reform should help a lot of that. I think it's a little early to tell for us to fully understand how it's definitely changing behavior. As you said, it's speeding things up, the statute of repose. I think that's helpful for everybody. I think everyone can get their hands around, the issues, because obviously there are legitimate claims and there are legitimate issues with construction defect. Sometimes they're not all legitimate necessarily.
Sure.
But they absolutely serve a purpose, but it just helps everybody out when you shorten that timeline. It makes it more realistic. And so I'm sorry. But it's just reform, I think, they're going to find, like you said, there's a lot of attorneys. I think they're going to find the next thing if tort reform truly does have teeth and it stays. I'm hearing that people are trying to poke holes in it already. I know something that really is affecting not just building and construction is just really social inflation, big jury awards, these nuclear verdicts, things like that. That's on a larger scale. We insure largely small to mid-sized businesses. So we're not as exposed to that as many larger insurers, but some of these jury verdicts are just getting
scary,
out of control, really. And I don't have the answers. Something needs to get fixed. And it's kind of like let's use cars, for example. Cars, not only, it used to be back when you and I were teenagers, someone would you'd buy a used car for $5,000, something pretty small. Your insurance would be relatively reasonable to drive it around. Gas was relatively cheap. You could have a entry level minimum wage job and afford that car. Now insurance, just first of all, the price of cars has gone through the roof largely.
There's no $5,000 car that runs with any reliability.
No, there isn't. The car prices have gone through the roof. Cars are now moving computers, so they're a lot more expensive to fix. So you've got insurance rates are going up. Same thing, like I said, just everybody seems to be suing everybody for any type of fender bender that you get into, especially in Florida. There's a billboard on every corner. And so the carrying cost of that car is significantly higher than it used to be. And so people don't realize kind of the inflationary effects that some of the, when everybody hears these big jury awards, or they hear, you drive by a billboard that says, such and such attorney has, just won somebody another $10 million or something like that, which in Miami, they're everywhere. In Tampa, they're everywhere. What people don't realize is that carriers, I know we're going to talk about AI and data, carriers consume that data, whether I'm on that claim or not. That data is all aggregated. We can get that data, and then we price our products based on what is happening. If that happens enough, prices are going to go up, and that is going to get paid for in the system. And we had an issue. We had a property and a homeowners issue, and that required legislative action. But the Florida homeowners market was absolutely burning up. Now, is it a great place to do business? Do I want to start writing homeowners in Florida, tomorrow? No. It's definitely improving, and it takes time for those improvements to flow through the systems.
Yeah. Listen, I know you're talking about expansion. I'm glad to hear that homeowners property insurance is probably not on the horizon for you. Offline, we may have to have a conversation if you were going to say yes, right? Or I try to talk you out of it. But yeah, it is an issue, right? And I completely agree with you. And you're seeing a lot of it. And I just saw, a massive verdict come out of Orlando. It's just on paper. They got to collect on it. But you see these verdicts come out and where it's coming from. And now I'm seeing it a lot because we represent several clients on pretty significant claims that are going to be affected and have been affected by the Surfside condo collapse, which has understandably kind of like one incident has put the eyes of the entire legislature, the governor, and all the people into, especially in my neck of the woods, where there's a lot of pariahs waiting for the reality of what do you do with an aging building that has to levy a $200,000 assessment per retired individual that can't afford it? Well, you buy those out, you knock it down, and up come the $10 million units to replace the people that paid $150,000 30 years ago and are thinking they're going to retire there. So there's a lot of issues, and we can get into it. I definitely want to make sure. So we try to keep these as a general rule to about 30 minutes. So if we go a little bit over, I hope that's okay. But I do want to make sure that we hit this AI topic because it's so big. Like you said, it could be its own, maybe in 2025 at some point, you and I can come back in like 6 months and see where we're both at. Because I've told you before, I'm embracing the heck out of it, trying to figure it out. And we have, as a law firm, we have reliability things that we need to worry about. So we have not rolled it out. I'm experimenting with a lot of the features myself, none of them on claims. We still have to have people do them traditionally because we're using them to look at a variety of different things. Now, how do we deal with it as a law firm? And I'm going to be interested in seeing how you're looking at it in your space. How am I dealing with it as a law firm? We can start with document analysis. If it's going to take somebody, there's 2,000, for example, construction defect, to use your point, thousands and thousands of pages of documents that typically might have some young lawyer sitting in a room with no windows, sliding pizza under the door and having them review documents for 2 weeks. Push that down. And instead of passing on a bill of 80 hours to review 4,000 documents, that bill becomes 15 hours in some format. And we feel comfortable to 100%, can't be less, that we're doing that. Well, what that puts it on us is to come up with an alternate pricing model, right? And something that most insurance carriers, I think, would embrace from any law firm, whether it's defense or otherwise, is can you put forth? So that's on us to innovate into a different model. We're not a 501c3, so we have to remain profitable. But how do we work to benefit you or a different insurance carrier? And how do we do that? And so we're dealing with it. And law firms on all metrics are one of the top 3 businesses that are going to be impacted by AI. But I didn't go beyond 5, but insurance has got to be in the top 10. So yeah. So how are you looking at, let's just call it the advent of AI? We can talk about how it's going to deal with identifying risks on claims early on, right? And we can talk about an example I gave you earlier, just one, and then I'll kick it to you, which would have been, well, you got a claim that maybe, when I was a young lawyer, it came up in the late 90s, early 2000s, every claim required surveillance. Send it, everyone. It's like shooting blindly at a dartboard and hoping you get one, and then you justify it to the client. Be like, look, we got somebody who saved you money, but it's like, well, hold on. There's 9 out of 10 claims that I ordered it on that we got nothing. And that's an internal thing for you. And that space is kind of dead. You don't see it now as much unless it's a relevant case. However, I will tell you that I see it, for example, maybe there's a case that a law firm would have, or an adjuster that works for you might never have recommended a nurse case manager. They're expensive, but if there's data, and this is my personal hypothetical, not yours, but if there's a case that your people have that AI may be able to use in some form, and all of a sudden a nurse case manager gets assigned like 8 months earlier than it normally would, I'm assuming there's data now and analytics that, and I remember when you and I first became friends years ago, you mentioned a company called Tableau. Feel free, Tableau, by the way, to help sponsor the show, except for the fact that I didn't use it because it was too expensive. I realized Matt and FWCI and Almazan Law were on different stratospheres of finances. So, but AI has a place, right, in what you do, from risk to reserves to the example I just gave and others. Maybe give me a little bit of an advent of how you're embracing it and how you see it affecting your industry.
Well, like you said, I'm the insurance industry lives and breathes off of data and just what the technology advancements and just the access to data has just exploded. I mean, across all lines of insurance, but the predictive modeling, predictive analytics has been around for a while. It gained a lot of traction probably 10 years ago, really started in earnest, and carriers were using it to help them price risks. On the commercial side, the big carriers, the personal auto carriers have been using it for a long time, but we're a data-driven business, and so I think the examples you just gave are perfect examples. I think AI in general is going to be deflationary across the board for insurance specifically, but I think it's going to allow employees and companies to remove themselves from the rote kind of, like you said, reviewing thousands of documents, things like that. And it's going to draw an adjuster's attention to claims if it's done right. Now, it can be done poorly. I know a lot of my old chief claims officer, who you and I both know, she's now on my board, but she, anytime I talked about predictive modeling and use in claims, over my career when she used to work with me, she'd always roll her eyes and say, yeah, they tried that back in the 90s and the 80s and it just never worked, and because it was so dependent on data entry from the adjuster, and it was dependent on human interaction. AI is going to has already drastically changed all that. And I think where we are as a company in general now is we're we're too small. Where compared to, the Facebooks, the Amazons, the Googles of the world, the Microsofts of the world, they are investing billions, tens of billions of dollars into this. Where companies like us and you are going to benefit is the tools that we use are the AI is getting integrated in the tools we use. I mean, the newest Apple update or iPhone update has, AI in the iPhone. Our CRM, we use HubSpot as our CRM. They've got AI integrated with that. We're a Microsoft shop here. Things as simple as we've started using it, Copilot on meetings. So like, let's say instead of a podcast, this is you and I having a Teams meeting. Instead of having someone take notes, Copilot will literally take notes and summarize. I mean, and it does a pretty good job of it. Things like we're using it for safety videos. So we've always been, we're a smaller carrier in the grand scheme of things. So we've always been really focused on service and, customer support and
right, but hold on,
resource.
but by its very nature, but your businesses are smaller and medium sized, so they're not going to have potentially robust safety programs. So whatever you're about to say about safety videos, at the end of the day, the clients that you service are a lot of them don't have.
Yeah.
There's not 4,000 employees, so they have to roll out a 30-minute safety video. So I didn't mean to interrupt you, but I think it also goes with your motto, whatever you're about to tell me about creating safety videos.
Yeah. Well, there was a period of time where we had like a little studio in our building here to where we would do, kind of interviews and videos. It wasn't a podcast, but where we would talk about, we'd have a safety topic, things like that. Well, now, our head of risk management on the safety side, we have a tool, basically it's an AI video tool to where you can prompt it with some things. It comes up with a script and it comes up really with a safety video. What used to take him a lot of time, now he can bang out safety videos on ladder safety or you name it, and in a tenth of the time that it used to take him. And now
instead of the cost,
instead of him taking all that time to come up with a 3 to 5 minute quick video that, let's be honest, not some people are going to be really interested in, some people aren't going to watch. And so it's difficult to really look at the ROI, especially as it pertains to like claims. Now we can pump out these videos and the people who really want them to ingest them. It's great. I mean, that's just a small example. Our developers, so we're a tech heavy shop. We understand that for our agents, it's very important for them to be able to write this business very, very quickly, and so we have a lot of developers on staff. It takes them significantly less time to make changes to our platforms than it used to, again, using Copilot and AI. And so we're still in the first inning. It is very early days.
Yeah, we're out, right. Even if somebody just walked the first three guys, you can't take them out.
Yeah.
So,
and agreed. And it's going to be, I'm trying to stay as plugged in and intentional as I can. But if you were to tell me if I were to try to predict how our world is going to change in the next 24 months with AI, I can't even
begin to assess it. And listen, I do it from my end, right? Because so by the very nature of my profession, the people who have gray, which I finally can grow some of my own if I didn't shave today, and that's both fortunate and unfortunate. But that reality is that those people, for the most part, are primarily not embracing it necessarily. But like for you with the young adjusters or people that come in, new people that are younger are going to expect more tech. So it's a combination of we got to go there. And the same way, I know your kids are younger than mine that are 17 and 15, but my girls grew up in an era that everything has been tech. So they move on, and everybody after that is every advancement of every aspect of it is absolutely going to flow. I will give you an example yourself, as you mentioned it. We use a case management platform at our firm that I implemented 7 years ago when it was in its infancy, called Clio, that just had a $900 million venture fund raise to become the largest legal tech company ever to be established, and the largest company for a fundraise out of Canada. And somewhere out there, Jack Newton, the CEO of Clio, is like, Alex, thanks, buddy. I really appreciate the plug. But I used to go to that conference that they have every year, and it was just me for the first couple of years. I took 5 people this year. And that's because I'm putting people in different spaces. We got to go into the AI space. They have an AI lab, and we had to go there and take a look at stuff. I'm one of the first beta testers for what is now a product they just simply rolled out called Duo, which is an AI interface within the case management platform. It's not doing anything, quote, legal. What it's doing right now is helping us with efficiencies. So an individual can go onto the platform and say, hey, prioritize my week. look at this particular case and tell me over the course of the next 3 months what's upcoming. I have a client call in 15 minutes. Can you please summarize the last 6 months and what are the most recent events? And we get, somebody will get an email. Now, one of the challenges, and I can already see it, is the technology is only as good as the people who use it. So I really got to get a buy-in. Much easier for me with about 30 people than it might be for a law firm that has 100 to get a scalable buy-in. But it's here, right? In some way, and efficiencies. We always heard about that first lawyer with the AI that filed the case in New York that had like 5 cases that didn't really exist. Well, that idiot used the internet. I mean, we use AI tools within LexisNexis or Westlaw that would be our typical legal, and those are closed language models. So, like I told my kids, not everything on the internet is true. Well, in the legal platforms that we research in, it is. So I think it's absolutely here to stay. I think for you guys, I'm looking at it from the standpoint of, a caseload for an adjuster handling, say, workers' comp cases is going to be and has been traditionally higher than, say, somebody handling CD construction defect cases. Right? I think you would agree with that. I'm going to make up a number, but let's say a CD adjuster would have 30 claims, and a workers' comp adjuster might be able to, depending on the carrier, could have 200 plus cases. I think AI absolutely has some role, as I envision it in the future, on helping that particular adjuster manage more and be more efficient. And I agree with you. There is no roadmap, man. We can't see where it's going, but it sounds like you agree that it absolutely has a major role, a transformative role in your business, right?
It'd be like back in the day, like pre-internet, where, basically would have volumes as an attorney. You'd have volumes of books sitting on the shelves and you'd have to look things up or whatever. It'd be like not embracing the internet, and how much time that would take you and how much more inefficient it would be. And I think it's going to do one of two things for you guys, or like, let's look on the adjuster side. Again, I'm not exactly sure exactly what it's going to look like, but it's going to do one of two things. It's either going to lower prices. Law firms are going to compete and say something that would typically, our client, I know we're charging hourly, but, usually a client would expect to pay this for this type of litigation. You're going to have law offices that are going to drive down that price because they're going to say, I'll do that for slightly cheap, 10% cheaper. And then someone else figures out how to better leverage technology. I'll do that for 10% cheaper than that. Or you're going to, when you're looking at attorneys, to your point, again, I've never worked in a law firm, but when you hire an attorney, you expect a certain, you expect a certain productivity level out of your attorneys, right? An easy way to make sure that they're embracing technology and AI as it matures is to say, like, okay, well, the bar has been raised. The expectation has been raised because you've got these 5 attorneys who are embracing it and they're churning out this workload for their customers at these rates. The customers are very happy. You have these 5 attorneys who aren't embracing it necessarily. They can't be as efficient. They're not. Their clients are going to be unhappy inevitably in the long run because they're probably paying more for less from those attorneys, and it's going to work itself out.
It's going to work itself out, right? I agree with you. It's going to work itself out in some format. That's why I think these alternate, pricing models, and again, we can go down so many rabbit holes on the AI stuff, but these alternate pricing models that are going to have to arise and have to be embraced and have to change, right? I remember working at other firms before I decided none of them were good enough to house me. I remember being at these places and knowing just other people that were in the industry. And if you had flat fee, it was because somebody just decided, well, subjectively, I think this is what it is. Well, and there's a game changer now. You can really take data at your company as an insurance carrier, at any law firm. It doesn't have to be defense. And you can now look at a historical amount of data and entries and different things and really give a more accurate opportunity to do something and say, here is a model by phase or whatever the case may be. So I absolutely agree with you, man. I think there's an absolute place in AI. I know that we've gone over a few minutes here as I have my producer looking over me, and I know I'd be cognizant of your time. So maybe what I can do, I haven't come up with I know some podcasts, especially in the legal space from people who've been successful, they end with like the podcast host being like, I always ask the one question, the same of all my guests at the end. I don't have that catchphrase, brother. I don't have one of those. So, yeah, right. Right. I don't necessarily need to have one, but I want to make sure that the last words on the program, other than me saying goodbye and thank you, come from you. So maybe after everything we just talked about, something that can go out there. I don't know how many people are going to watch it. I know my mom will, although my sister has to go to her house and turn the computer on. Somebody in your family probably will. And then we're gonna share the shit out of it. So some people are gonna watch it somewhere. So maybe some parting words from you, my man. And thanks for the time today. I really appreciate it. I think these things are so informative for whoever gives us the time to listen to it. But maybe giving us a little bit of what you think, just in some sort of summary, or getting some things out that you haven't.
Well, appreciate you having me on. You and I, that whoever is watching this, we couldn't know that you and I have these types of discussions and some political discussions at different conferences over the years, and
Be
they're
careful.
always
Be careful.
fun. Yeah. I'm not going there.
I'm gonna put the
Fun and
guardrail.
engaging. I knew when you asked me on the program, I was like, oh, that's going to be easy for us to fill up, 30 minutes of time because both of us can talk a lot. But I appreciate you having me on. And I would say, in regards to kind of what is next in business, whether it's law firms, insurance, general, just the country with what's going on, I would say that be curious. If you're not curious and intentional about keeping your finger on the pulse, you don't have to be on the bleeding edge, but you'd better be keeping an eye on what's coming and how it can benefit you personally, professionally, things like that. And probably be humble, and understand, especially when we talked about some of these younger kids. And I know they kind of get a bad rap, or I shouldn't say kids, young professionals. They kind of get a little bit of a bad rap. I'm sure this happens in every generation. The more senior people, always, but
We're not new to it.
as you said about your daughters and the young kids, young professionals that are graduating college, they have different skill sets and they're very plugged into technology, and it's about bottling that and leveraging that with new employees that we hire. And so as people who are, I would just say we need to stay humble and stay curious about kind of the things, because our world is going to change very drastically over the next 5 years.
Ain't that the truth, man? And true to my word, I am not going to try and usurp you and say something else. I'm just going to tell you, my man, thank you. To know you and to know your family is to know that, like me, you and your family are a family of faith. So I think it's appropriate on this December 17th, I think it is, a week before Christmas Eve, to tell you something that your father, I know, would appreciate, which is Merry Christmas. And I will add one political thing. We do have somebody coming into the White House who's going to say Merry Christmas. And I believe there's a nativity scene coming to the White House too. So that'll be my little ending. But Merry Christmas to you, to your family, to the kids, to everybody, man. And enjoy the last 2 weeks of the year and the Christmas season. Okay. Thanks, pal, for being here. I really appreciate it.
Thanks for watching the Full Docket podcast. To stay up to date on upcoming podcasts and guests, like and follow us on social media for the latest updates. To keep this podcast part of a greater dynamic dialogue, we encourage your comments, and we'll see you next time on the Full Docket.